Welcome to the Uncontested Investing Show, presented by REI Inc. magazine and sponsored by RCN Capital. Each week, we focus on bringing you candid convos from the best in the biz. Here's your host, Tim Herridge.
Welcome back to Uncontested Investing. I'm Tim Herridge. Thank you so much for deciding to spend your time with me again today. I am joined by my good friend, Rob Fuller. Rob, thanks for coming down.
Thought I was going to have to remind you of my name. We're that good of friends.
It's not Filler, it's Fuller. It's Fuller. Rob, just tell everybody a little bit about yourself.
Yeah, so in 2007, I was graduating from college, thinking I was going to med school. I had applied and had been accepted for interviews, 5 interviews, went to the first and pulled all my applications out. So the funny thing is that when I was dating who's now my wife, then she said, "You're not going to go to medical school." I was great at the courses and scored well, did well on the MCAT and enough to get interviews, but I didn't have the passion for it. But what I had a passion for was real estate. And so, time passed, not that many, a couple of years later, and I think in 2009, we bought 13 houses, my wife and I together. And as time progressed, I think by 2016, we were buying 30 to 40 homes per month at the peak of what we were doing. And at the time, there was a lot more distressed homes. Obviously, today, we may see some in the next few months, who knows, but certainly haven't seen many for the last couple of years, especially with the forbearance. There was really none to speak of. But as time passed, we were buying so many homes, it actually became a burden to operate with that many homes that we were buying and selling. And so we started looking at other opportunities. We had some rental. We had quite a lot of rentals, actually, as we tried to hold on to as many of them as we could. But time passed, and we started moving into land acquisitions and building ground up. So we actually still sold a number of those units that we built to institutional build-to-rent groups, to the point that now we have a number of communities that are in some phase of annexation, rezone, entitlement, horizontal development, home building, kind of all across the span, where we'll hire site contractors to do the horizontal work. Right now we have 3 developments in horizontal construction, a couple that are supposed to be coming into that within the next 3 to 4 months. And then we've got a few that are in vertical construction. We're building homes. And so that's what we do now. We try to buy early. We make our money by buying right. And that's when I talk to investors, there's the old adage of location, 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 which is imperative, right? The right location in the right city at the right time. But also it's buying it right. You don't speculate that this house is going to be worth $1 million in 20 years. So or in 6 months, more like for that, for a fix and flipper. Oh, this house is going to be worth, 200% what it's worth today in 6 months from now, right? Just based on value increasing, right? If you're going to actually build into the value by increasing the asset. Anyway, some of that's probably a jump in the gun a little bit about what we want to cover today. But yeah, that's kind of my story with investing and how I got into it.
I can't wait to ask you more questions. I start every episode with the segment I call the bottom line up front, the bluff. And it's in the Marine Corps when I used to brief generals. They always said, don't bury the lead. Tell them the most important thing up front in case they have to get up and leave. So 2 minutes, up to 2 minutes, I would like you to tell the audience the most important thing they should be focused on today, what they should be doing, what they should be avoiding, or things they should be on the lookout. Good to go?
Yes.
Go.
I think this goes back to what we were talking about, which is buying right. Over the last couple of years, you can make a lot of mistakes. And with the market appreciating like it has done, those mistakes can be covered up. With the market in its current state of affairs, lending is more difficult. The declining home values, potentially more dramatic in some markets, depending on where you're at. Buying right is more imperative than ever. People have a tendency to kind of over-project their ability to get things done in time and in money and dollars and costs of rehab. And so you want to get those numbers really tight, whether you're buying to hold or you're buying to flip. You want to make sure that you get the numbers right on and take a step back and say, maybe even take it to a mentor a friend, somebody else who can look at those numbers and say, I don't think that you're being realistic here, here, or here, and listen to those people. Now, there's the saying, oh, haters will hate, but that sometimes is the case. That sometimes we need a dose of reality. To say we're going to do $50,000 worth of renovation in a month is not probably realistic. We need to take a dose of reality, step back. The economy is changing, and I don't think anybody knows exactly where it's changing, exactly, or how it's changing, how long it's going to take to change entirely, and what the long-term effects are going to be yet. There's a lot of speculation. After something happens, everybody will be able to look back and say, see, I told you so, but from today forward, they don't have solid answers that we could rely on. So what I would say is buy right, take the advice of others, and be cautious in your efforts.
So I love that, because you said be cautious in your efforts. You didn't say be scared.
Right.
You didn't say operate out of fear. You didn't say sell everything and burn the boats, right? You're just saying be cautious in your efforts. And that leads me to something you did not cover when you were talking about your background. A couple of years ago, I'm not sure when, you started a software company, correct?
I sure did, yeah. House Folios.
And when did you start that?
Well, that's a little bit murky, because basically when we started it was when
did it become a business?
Yeah, really within the last couple of years. Prior to that, we were, like many investors, we're using spreadsheets or Google Sheets or some version of that, Airtable or whatever. But the problem with that is that especially as we grew to where we were doing 30 to 40 homes a month, you have 15 people in the spreadsheets and touching it. We use Google Sheets a lot because multiple people can manipulate it. But person X deletes a cell that affects 5 other people, and we don't even know it's happened. We make an acquisition based on the rehab budget being deleted out of the spreadsheet
Right.
on page tab 1. Anyway, so the reason we started the software was to hopefully curb some of those mistakes that are there, but also it makes it much more transparent, the math. And for me, math isn't emotional. That's the nice thing about it, right? I have one broker who would bring houses to us. Oh, this is going to sell. And in fact, he was one of our first adopters of House Folios, because he brought me a deal. It was so good.
So good.
So good. I was buying it for $60, and it was $20,000 worth of renovation, and it's going to sell for $100. I'm definitely going to make money on it, right, Rob? Well, did you do the math on the finance costs, the acquisition closing costs, the disposition closing costs? All of the things that aren't there. When you do the math, I broke it down with him, and I said, you might make $5,000 if you get $5,000 more than what you're thinking you're going to sell it for.
Yeah.
Right? So I would and he said, oh my gosh, I thought I'd thought it through. And this guy's done hundreds of fix and flip.
Right.
So my point is that, the math doesn't lie. The math is what it is. It's not emotional. It doesn't tell me how beautiful the front looks. That's all important when you're selling a house. But the math is the math, and it won't try to mislead you with tales of a pretty front door.
Speaking of math misleading, I've been telling as many people as will listen to me lately, be careful with percentages. I feel like we've gone from a period of false statistics to a period of almost real statistics. And for example, I heard that the days on the market in Boise, Idaho were up 200%. And when I looked at it, it had basically gone, Rob, from 7 to 20. Which you and I know historically
That's still incredibly low.
is incredibly low.
Yeah.
But if you're reading the headline, if you're reading so I don't get a lot of people to read my article, and this was Government 101. They taught me in 9th grade, I think. A lot of people aren't going to read my article if I say, days on the market in Boise halfway back to normal.
Right, yeah.
Right?
Oh, okay. We're almost back to normal. Keep going.
I want to know about Ukraine, right?
Yeah.
But when they see it's a 200% increase or more than double, now everything's horrible. So foreclosure home starts, they're up 184% year over year. Well, there were none last year.
Right.
So it's historically, though, and even there's some very respected real estate publishers that I follow religiously because their stuff is so good that have been guilty of this.
Oh, sure.
The leading headline is foreclosure starts up 184% year over year, but still well below historical norms. Like, I get it, you need people to read your article, but you said the math never lies. I got to tell you all these stories. This billionaire that I knew told me, I mentioned percentages to him one time, and he was from London. He goes, "Oh, Tim, I don't want to know percentages. You can't buy a cup of coffee with a percent. I need to know dollars." And I love that, though, and I say it all the time still to people, like, no, don't tell me the percentage. Like, did we do 100 million or did we do 80 million? Like, I need to know that. Right? Because if the goal was 100 and we did 80, don't tell me 80%. I don't care, right? Like, what's the dollar amount?
That could be $800 out of 1,000. That could be 80,000 out of 100,000. Yeah. So I have a mentor of mine who says the same thing. Well, what's the dollars?
Yeah. So you talked earlier about passion, and I just love leading with that. What was it about real estate that made you be passionate for it? Was it the deal making, the creativity, the structural, the construction? And then here we are, I think you said 16 years later. Yeah. Mm-hmm. Is that passion still there, or has the passion grown or moved somewhere else?
I think that's part of the reason for me I moved out of doing fix and flip. I loved it. It was nice because it allowed some creativity. But the answer to your question is, I don't know where the passion came from, but I think it is all of those things, like the ability to kind of make a deal, see an opportunity, and turn it into something that's different, that's more usable, that's nicer, that somebody else wants to have, and so I think it was all of those things that kind of has driven my passion. But that's partly why I ended up out of fix and flip, is it got to a point where it kind of got to be a little bit of a drag when we were doing so many of them. We had a lot of organization. I felt more like a manager than being in real estate because of how many people we had to help manage that organization of all the rentals and all that. And so to kind of keep my passion, I moved into the development where I went back down to fewer people, and we could see on a grander scale affecting entire community development. But the passion for me is still there. I love it. Even still, I mean, we get involved in some fix and flips sometimes, but it certainly wasn't like it was at that 4 or 5 years ago when we were flipping hundreds of homes. So
we're going to take a quick break. When we come back, I want to talk about some of the development stuff you're doing. I find that highly intriguing, and ultimately it's something I want to play in my investment career. And then I want to talk about data. I want to talk about systems and processes, and then also, cover a little bit about your experience through the Great Recession. So stick around and we'll be right back.
Are you looking for fast funding for your next fix and flip? What about leverage for your next long-term rental or vacation rental? Need capital for a new construction project? Look no further. RCN Capital has you covered. As the leading nationwide lender for real estate investors, RCN Capital offers short-term and long-term financing solutions for your next investment property. RCN Capital takes a common-sense approach to your loan request, offering high leverages and low rates backed by superior customer service. Whether you're investing in single-family properties or multifamily properties across the U.S., RCN Capital has funding options for you with no hoops to jump through and quick closings in as little as 2 weeks. Ready to get a quote for your next investment property? Visit rcncapital.com/podcast to apply today. There is no fee to apply. Again, that's rcncapital.com/podcast to apply today.
Hey, welcome back to Uncontested Investing. Tim Herridge here. I'm still here with Rob. Rob, I want to jump right into data. House Folios, I've demoed your product. So I get it. You're doing all this volume. I guess I should say I've demoed your product and I like it. I kind of left that hanging there.
Thank you. I appreciate that, Tim.
What was the process that took you from let's get rid of Google Sheets to, I'm assuming it's a software as a service in essence, to licensing this software out? Like what, could you talk about that part of your entrepreneurial journey?
Sure, absolutely. I think The first thing is understanding, where we came from, right? We had these spreadsheets that were cumbersome. Not only that, but we had multiple people inputting data that had, if you went to their browser at any time, there were multiple tabs that, this website, that website, this one, we're pulling data from all different sites to get data for one particular house. And like I said earlier, somebody deletes something from this cell and it totally, it basically obliterates the value of it because they've deleted the property management costs out of the long-term hold, or they've deleted rehab costs, or sometimes it was something smaller, but regardless, those mistakes made errors in the calculations, which was problematic. And so we started moving to the software. As far as data, data, it's so expensive, right? First of all, to the extent that as an investor, when we were flipping houses, we had people going and looking at all those different sites. And so we wanted to try to get it from more or less from one source. And that data, $250,000 a year in expense, right? These are real data expenses. I'm sure some softwares pay even more for their data, but you're getting MLS data and assessor's office data, which is free, but it's gathering all this data together and getting rental data from property managers. And there's different ways that different companies source that. And so all of that data that goes to play to creating a stronger advantage for an investor, which, with our particular software, and there are other ways to do it, which I did, but when I started, but for an entry level price of say $40 or $100, depending on what they want to achieve, you get all the data that would be kind of crazy. It's crazy cheap relative to what it is, right? But data, regardless of whether or not you're getting it from somebody like our software or from finding it yourself, it's essential to making good decisions. Because without the data, you don't know. If you don't know what the rents are, how can you project whether or not the investment's going to be a good buy if you're going to hold it, right? If you don't know what the comps in the neighborhood are, how do you know if a fix and flip is going to, well, A, if you're paying the right price,
right,
and B, if after you fix it up, you're going to be able to get a solid sale price. You have to have that amongst much other data. So, data is essential. And, I've met enough investors that go by their gut, and that works sometimes until it doesn't, right?
Well, and I like that you talk about both internal and external data. Mm-hmm. Internal is the stuff that you generate, and external is the stuff you rely upon. Mm-hmm. And as a large national lender, we rely on a lot of information from others. Mm-hmm. And then we have a lot of salespeople that are entering information constantly. So we go through that struggle. And if you imagine, we have 1,000 loans in the pipeline right now. We've closed 5,000 or 6,000 this year. It gets to where you're kind of like, okay, this data is important. And you can't have someone changing something they weren't supposed to change. Nope. And I've watched, as part of my growth in this industry, I've done some consulting for some of these large funds. It is amazing how many of them still, at this stage of maturation, are using Google Sheets with no cell protection.
Right.
And like the way we make this $500,000 decision is someone has to highlight it orange.
That's right.
And you're like, wait a second. I have that power too, right?
Everybody who has access has that power. Yeah.
And like you said, there's no real audit trail. There is an audit trail if you enable it and you go and to go back and look at it.
Yeah. But that's usually after mistakes already been made and execution's already occurred.
Yeah. Or, and even if you don't quote unquote buy the bad deal, you may have earnest money, you may have option money. And also, you said earlier, from the assessor data, assessor records, which are free, and all of this points back to something that I love to harp on. And I tell people, either way, you're going to pay.
Yep.
Right? You're going to pay in mistakes. You're going to pay in time, time to go get the data yourself, time to go verify information, time to go do it yourself, or you're going to pay to leverage someone else or their system. Mm-hmm. And I don't think I've made that point in a couple episodes, and I have to drive that point home. Like, if you're not going to pay for advertising, you're going to pay a wholesaler markup in the house buying business, right? Or you're going to pay a realtor commission, right? Like, I mean, you're going to pay. You just have to pick what you're going to pay.
Well, I mean, I always chuckle because people will say, yeah. I mean, look, actually, Robert G. Allen lives in my neighborhood, and he wrote the book Nothing Down in the 80s, right, in the 90s and then 2000s, and he's kind of refreshed it. And the reality is somebody's putting money in. And even in that book, he acknowledges that, you might be able to get zero down, but it's because I got my buddy Bill to put up the money, right?
Right.
And somebody's putting money into this thing. The lender's going to be putting money. You're going to be paying interest on that. So somebody's going to be putting money in. It's just hard to, things don't happen without money changing hands.
Well, and there's a currency that enough entrepreneurs do not value. It's time. Because if you have to go knock on doors for 2 months,
right,
and you could be making 80 grand a year, right? Or let's just call it 6 grand a month to make the math easy. I mean, if you could be making 6 grand a month and it takes you 2 months of full-time effort, you've got 12 grand in that.
Right.
Plus gas, plus phone, like plus expenses.
Costs, yeah.
And so I just tell people all the time, value your time as much as you value that bill, that credit card bill.
Yeah.
So land development, it's quite the jump from 300 houses plus a year flip to 1,300 acres. Can you talk about that transition in your life? I'm sure you didn't go straight to 1,300.
Yeah, I mean,
we talked about it before the show, so I jumped there.
Yeah, so I mean, essentially, when we started, we were still flipping houses. We were buying infill lots and started building homes as well. And that I think we started buying lots in 2014, 2015. Distressed homes were still kind of around, and they were still a pretty decent number of them. But for us, especially as the home buyer was willing to pay more, the margins for fix and flip went down, and the number of rentals that we could buy went down because we still had to figure a margin in there at the acquisition, all the effort, all the people we have. We had to have some dollar amount in there. So we started with buying infill lots and building homes. And then even those became scarcer in the markets we were in. And so we started buying parcels that could have multiple lots. I mean, so I think one of the parcels we bought had the ability to buy 6. It was 6 lots. We just had to finish the entitlement process. It had already had a preliminary map on it, and we just had to get that final map on it, right? And so that wasn't that hard, right? And so then we did the next deal and the next deal and the next deal till about, I think 4.5 years ago, we bought 825 acres. And that particular community was large lots that were selling to retail home buyers, right? But that process it took 2.5 years to get to lots, right? Between you go through annexation, rezoning, entitlement, all of that takes time and some money, but relative to the time is right? If you value your time, it takes a lot of time. But the cost to the land was far less than the cost of a piece of finished lot that you could go and build a home on right away.
Right.
And so it takes a little bit of patient money and patience to kind of get to that point. But yeah, now we've got an 1,800 acre parcel that we're closing on Monday.
So passion and patience. So we're going to take another break, and then I want to talk about a lot. It's going to be time for the Money Minute, and then we'll get into rapid fire. So stick around. We'll be right back.
REI Inc. is a monthly business publication for real estate investors, covering all types of real estate investments and strategies. It is the most comprehensive real estate investment publication on the market. All of the articles are written by the top leaders in the industry, so investors are assured of always getting the best information possible. Each month, REI Inc. also profiles the top companies in the industry and provides insights and data into key regional markets. Along with their sister platforms, the REI Referral Network and Highest Invest, real estate investors have exclusive access to off-market investment opportunities and national acquisition and disposition initiatives. To learn more, visit www.rei-inc.com, where you can also access the REI Referral Network. Also, be sure and visit www.highest-and-best.com to view the latest exclusive off-market assets with near immediate acceptance decisions and closing strategies. You can also email marketing@rei-referralnetwork.com to request more information.
Welcome back to Uncontested Investing. I'm Tim Herridge here with Rob Fuller. Rob, Time for the Money Minute. Imagine there's a young entrepreneur that has stuck around with us for the last 20 minutes or so, and this is the only piece of advice they're going to get all month. Just imagine you were talking to, maybe it's young Rob, maybe it's someone that's important to you, or just the young entrepreneurs out there that you want to influence. They're going to get 60 seconds of advice. It doesn't even have to be about real estate. It's up to you. 60 seconds, the Money Minute. Go.
You know, you did give me some warning on this question, which helps, because there was just so many things that I wanted to share. And really, I think the thing that I took away as the one thing that I could share is find a mentor. I believe that because I've personally experienced it, there are a lot of people who are willing to give of their energy, their time, their knowledge, the things they've gained. For me to boil it down in a minute, the thing I would say is find a mentor that does or has done what you want to do. You want to get somebody who will believe in you and somebody who's willing to give back. And there are a lot of those people around. Somebody who's got the wisdom that can help guide you away from the potential mistakes and help you guide you into profitability. Especially when you're young and ambitious, that, like I wish I'd have had this advice for myself to really go find a mentor who would teach me.
You know, Rob, when I look at the reason I've been successful, I was on a podcast recently called the Underdog Podcast, and I shared my story. And I haven't shared a lot of my story, and I actually shared enough of it that I had my kids listen to it last weekend, because there were a lot of people that helped me that didn't have to. Mm-hmm. There were a lot of people that gave me advice, now, albeit it was on me to listen, that has put me to where I am as just a kid from East Texas with no money and no real parental influence that Ed Mylett talks about in his book. Like, I am the one in my family. Like, I've changed the course. So, but these mentors, I don't think there's, number one, I get a little very non-real estate-ish on this. One, I don't think enough people will listen to a mentor. They don't listen anymore. They want to validate and verify everything with Google. And number two, I don't think there's enough people out there willing to be mentors anymore. And I think if you're listening and you have something to share, I highly encourage you to share it freely. You don't need to launch a e-course to share your information. But if you're out there and you're struggling, what helped me and what made me was having mentors. And sometimes it was a mentor I was paying through training or education, but more times than not, it was someone I was adding value to their business or their life, and ultimately in exchange getting a PhD in whatever it was I was interested in.
I still have mentors that I speak with frequently. You know, I've got one that I probably speak with every week about different things in real estate. You know, he's much more cautious than I am. He's in his 60s, but he gives me advice, sage advice about, you know, be careful. This isn't my first time through this, right? And so he can kind of help guide that. And I think that's invaluable. And to your point, sometimes you have to pay for those mentors. I would just say there's a lot of free resources out there, but be careful of the free ones because you get what you pay for, right? Sometimes. And sometimes you have to pay for some, but also be careful of those too, because sometimes they're just looking to make a buck, right? So be wise and find those people who are willing to give back. And I may be a little less skeptical of it because maybe I've just been fortunate to find a lot of really good mentors in my life, and maybe because I interject myself in their lives. You know, there's one I think of that's a multifamily investor who had his dental practice destroyed in San Francisco in '89, and took that $1 million and started buying apartments and just took all new loans on this dental equipment, and then started buying apartment complexes and kept his dental practice. And gentleman has done very well. He's well over $1 billion worth of real estate assets with just that $1 million, and he doesn't partner with anybody, right? But I interjected myself into his life by saying, hey, can I take you to lunch? Can I ask you questions? What do you think about this? I bought him lunch, you know, and I was a young kid, and I think that sometimes people are willing to, and if they aren't, they'll say no. Or
Yeah, well, lead
go
with
once.
value though, right? Like don't just like and be careful if you're out there listening. Just be careful about asking for too much too fast.
That's true. Yeah.
Without adding some sort of value. You didn't get to a weekly conversation with that mentor from the beginning,
Oh, no.
right?
No.
It's now a relationship.
Yeah.
Yesterday, I was in mediation with an HOA that I'm in a lawsuit with, and my attorney, friend of mine, I'm doing it pro se because it's in my personal name. It's my old homestead, and it's probably all ego actually. But anyway, I'm suing them. And my buddy Scott, who's a mentor of mine and also a real estate attorney, said he'd be available if I had questions. I called him, he didn't answer. He was on a plane. He forgot to tell me that part. Like,
I'll be availed, and then I shut my phone off.
Yeah.
Call me anytime.
It was funny because I thought, oh my God, I had a settlement proposal in front of me. And I felt like I was getting what I wanted, but I also felt like I didn't know what I didn't know. Like, what's the trap here? That was too easy. We did that in 4 hours, 3 hours.
Yeah.
And so I picked up the phone and I called one of my mentors named Hudson. He's also an attorney, used to own a bunch of title companies, and it's very quid pro quo. He'll call me when he wants to talk finance. He'll call me when he wants to talk a lot of single family because he's mainly a multifamily guy.
Right.
And so it's not quid pro quo. It's not favor for a favor, but we help each other in different realms, and it's a mutually beneficial relationship. I called him. He didn't answer, and I texted him. I was like, I need some quick, free legal advice. I'm in a mediation. He called me back like within a minute.
Okay.
Right. And I was like, I got this settlement. It's this, and this. He goes, man, it sounds fine. And hearing what you're telling me, your problem is, it sounds like it may not taste good to you, but this may be as good as it's going to taste.
Yeah.
And I needed to hear it.
Yeah.
I didn't want to hear it.
Yeah.
I wanted to keep fighting, but that age, and I want to move on to that now, and then we got to go into rapid fire. You talked about gray hair earlier in a different conversation. Hudson is older than me. My mentors are all older than me. When I started this business, I was the young 20-something that knew everything and had no gray hair, as you see me looking at me. We're working on the gray. How important do you think experience is, just in general, in real estate?
You're going to pay for experience, for lack of experience, rather. I mean, you talk to anybody who's been in real estate, at least that I know that's done a significant amount of real estate. Either they have the mentors, the people to help them through those, not fall into those pitfalls. Or if you're like me and maybe like you, I don't know, I didn't have a lot of that when I started as much. I made some mistakes that cost me a significant amount of money, right? Not having an attorney review certain contracts or talk to an accountant about something before I actually sold it and realize the tax consequences that next year. And, those are all mistakes. You're going to pay for them one way or another. When we were talking about over lunch, you don't always think about it at the time. You think, I'm not spending $50,000 to have an attorney review this on a $25 million deal. You better just spend the money because it's going to be something that you're going to regret later if you don't.
Either way, you're going to pay.
Yeah, that's right. That's a big deal, but small deals are the same way. I mean, sometimes it's maybe finding somebody who can help you out or you can ask the legal questions that will guide you moving through more transactions in the future, right? So you know for the future. And sometimes they're questions title companies can answer, and they're more likely to answer them, early and for free, essentially, because it's part of their service. But anyway, you're paying for it one way or another, has been my experience.
What's the most money you've ever lost on any one transaction?
I don't know. That's a good question. It's been more than if I'm thinking about transaction being individual houses.
No, transaction. 5 million, $1 million. Let's see, 6 figures, 5 figures.
No, yeah, it's probably in 5. I've never, on our big deals, we haven't had any big loss type setup. On the smaller ones we did. Hopefully we learned enough to be really, really wise to see multiple exits on our path on these land deals and say, okay, well, if this doesn't work, if we don't get it rezoned, what do we do? If we don't get this, what do we do? Multiple exit strategies. If we can't see a way to make a profit, then we don't do it. So those are the big deals. Yeah. And the smaller ones, There's unfortunately plenty of homes we lost money on, but nothing.
I'm a
more
six-figure guy. I've lost six figures, and I'm happy about it.
Here's what I will tell you. Here's what I'll tell you. A property management company cost me 7 figures.
Whoa!
And that's because I had hundreds of homes with them.
Yeah.
And they had some transition that really, really hurt us. Lots of delinquency, and they fired the broker and the people, and they had to bring in all new. And I was under contract.
Right.
It was not a good situation for me, to the point that the corporate property management company called me and was like, "Yeah, it's time for you to move your assets." So we did.
So this is rapid fire still.
Okay.
Shorten your answers. Planning or passion? Which one do you pick?
Planning or passion?
Yeah. Following a plan or following a passion?
You're gonna have to clip this one down. I don't know.
You got to pick.
I know.
This is my show. I get to make this decision.
I guess passion.
There you go. If you could only do one ever again, are you building new construction or are you flipping houses?
Building new.
Yeah. If you had to pick a business, the land development business or the software business, which one would you pick?
Land development.
Just so you don't know, so you all know, his software partner's in the room, and he's kind of like, okay, I know where I stand. All right, so Rob, we're out of time. I always enjoy being around you. How do people get a hold of you or do business with you if they're interested in talking to you?
You can reach out to us through our software, housefolios.com, and or you can email me at our company info at roipropertygroup.com if it's real estate related. If it's software related, we always want to talk with you as well, ideas, or if you'd like to be a customer, obviously you can visit House Folios. But
very cool. We'll put your cell phone number in big letters
perfect.
At the bottom.
Flashing.
Flashing. Parting thoughts, parting shots?
Have fun, enjoy, and don't get caught up don't sweat the small stuff, right?
That's right. So if you're still listening, which a lot of people don't till the last minute, Rob and I are recording hours of content on real estate investing, do's and don'ts, tips and tricks and advice. So make sure you follow Rob, make sure you follow his companies and their growth, and make sure you watch those videos when they're available. But we are out of time today. I appreciate you sticking around. Thank you for stopping by. And just remember, your network is your net worth, and today you've been growing both. We'll see you next week.
Thank you for listening to Uncontested Investing. Questions about today's episode or the podcast? Email podcast@rcncapital.com and make sure to follow REI Inc. magazine on LinkedIn and Facebook, and RCN Capital on Instagram, LinkedIn, and Facebook. See you all next time.